particular company that reported its numbers post-markets yesterday. Syngene International is the one that we're talking about. It was a steady Q2 FY24. Revenue growth momentum was intact and margins improved on a Q-on-Q basis as well. But the company has cut its guidance when it comes to revenue for FY24. It is now down to mid-teens versus high-teen growth, which was estimated earlier, due to slower US biotech funding. To discuss this and more, we have with us Jonathan Hunt, who's the CEO and MD at Syngene International, joining in. Mr. Hunt, always a pleasure to see you on our show. Thank you very much for taking the time out. Well, I went through the P&L and the press release yesterday, and the numbers were fantastic for Q2. Your margins improved to 28%. Your profit growth was 14%. The disappointment has come in the guidance cut and the uncertainty which seems to be emerging with regards to US biotech funding. Can you take us through what exactly is the situation on the ground when you say there is slowdown in funding? What exactly are you alluding to?
Oh, sure. I would agree with your first premise, which is I think the quarter was pretty good. First half, very happy with the performance. We're starting to see some nice operating leverage through the P&L. Really what we wanted to do is just make sure that people had thought through a particular subsegment of our business. As you know, we have clients all the way around the world. We serve clients in the US, Europe, and in Asia. Big pharma, big biotech, and then you can segment it down into the sort of VC-backed biotech segment. What you're seeing post-pandemic is just a reversal back to pre-pandemic levels of the amount of funding. We've had two things change there, I think, over the last couple of years. Interest rates have gone up compared to the pre-pandemic level. And that sort of high of investment, almost a once-in-a-generation high through the pandemic period of capital flowing into the biotech segment, is just starting to normalize. And that's got a knock-on effect onto those businesses, through into employment, then through into sort of demand. It looks to be temporary to me. Certainly, if I look over the last 12 weeks or so, funding numbers, they're back to sort of where we were the pre-pandemic, starting to look stable. And then it'll take a couple of quarters, I think, probably to work it through. We just wanted to make that clear to our investors. There's a little bit in the second half of the year to be worked through. I think it'll be concentrated for Syngene, at least, in the third quarter. Fourth quarter's looking pretty good. Strong end to the year and a strong exit.
That's good to hear. Because of the macro environment and the bit of deterioration that we've seen this year, is there a possibility of you scaling down your FY24 guidance further? Is that a risk on the cards?
Not. I would have done it if I thought that was the outcome. I softened it a little bit. I think a guidance cut is a little bit strong way of describing going from high teens to mid-teens. Mid-teens is still a gain share strategy. I think we're outpacing much of the industry, many of our competitors. Looks like a pretty good performance on a full year basis.
Would you think the lowered guidance on the top line would have an impact on your margins? Your earlier margin guidance was close to around 30% with a net profit guidance of close to 15%. Should we see a concomitant impact on your margins as well, or the guidance on that holds?
I think we'll hold it. I think there's enough we can do operationally to absorb that. I'll watch it during the next quarter, but certainly the feeling at the moment is around 30% still, where we'll end the year.
Okay, so as of now, you're sticking by your profit as well as margin guidance. That's what I'm assuming. But Mr. Hunt, one of the big contributions have been from Zoetis and the deal that you struck with them with regards to one of their animal health drugs. The contribution started in Q4. How much was it in this quarter, if you could share some ballpark figures with us, and if you could give us a sense in terms of the scale up of it as well?
Yeah, I think we pretty much got to this run rate that we expected now, steady state. We said it'd be a couple of quarters for us to, it's a new product for us, new product for the market. So you normally go through an optimization phase as you start producing it, improve your sort of week over week, month over month productivity. We're about where we expect it to be on steady state. So the current run rate is the one I would predict forward. And we gave guidance to the analyst community at the very outset of that would stabilize at about $50 million US per annum, and that's about where we are.
Okay. Just a quick question, Mr. Hunt, on two certain points that I wanted to bring up. Any more such deals which could be in the pipeline, such as Zoetis, which we could hear about in the next coming quarters, which could be in the pipeline? And secondly, the acquisition of Stelis's facility, where you spent around 700 odd crores. What is the status of that? When does it get integrated into Syngene entirely?
Sure. If I take the first question, pretty good market demand. We're out there, we're making connections. Certainly the visibility that we got from both the Zoetis deal and also the FDA approval. We had 2 FDA approvals in the first half of this year, one for the small molecule plant, one for the biologics. That's raised our profile, and it's led to a much improved level of incoming inquiries and discussions. Nothing specific to announce at this moment, but the deal pipeline in terms of conversations that are live is looking pretty healthy. On the Stelis acquisition, we're in that period where it's about finalizing the deal and the closing conditions. Those are going well. It's progressing to our timeline and plans, and assuming they're all met, that deal will close in this quarter. What we also said when we announced it was we would then take a period, I think a couple of quarters, to invest a little bit, upgrade that plant, put some new technologies in. Remember, Stelis built it as a vaccines plant related to COVID-19. We're going to transform it into a biologics plant. They're very similar technologies, but they're not absolutely identical. So a little bit of investment, then we go through a qualification period. So as a supply point, it really becomes something for next year rather than this financial year.
All right. Jonathan, one final question. Over the longer term, what is the kind of growth plans that Syngene has? Just to understand it from a shareholder's perspective, 2-3 years out, what kind of growth targets would the company have?
Super. I'd love to say more of the same. The strategy is clear. We're a CRO that's becoming a CRO CDMO twin-engined. As for the specific guidance, we normally do that at the full year, but I think you knew that in asking me the question.
Okay, so now that you didn't answer that, let's try slip in another one before we let you go. Biocon, they hold about 55% stake in the company. They have been paring some of that largely to take care of their debt in Biocon Biologics. Have you had any conversation about them looking to pare any further stake in your company?
Oh, that's a super question for them and their board. That's the same as any of our shareholders. I don't predict what any of our shareholders are doing. Though I would say I think Biocon, along with all of our shareholders, have benefited from what I think has been a sustained multi-year period of growth from Syngene, and that's reflected in the increase in our overall market cap over the last 4, 5, 6 years. So good question for Biocon. They report in a couple of weeks.
All right, Jonathan. Well, we'll definitely quiz Kiran Mazumdar-Shaw when we do speak to her. Thanks very much for joining in and speaking with us about Syngene and the quarter gone by and the guidance cut as well, or the guidance reduction. That's Syngene. The stock is down around 7% reacting to that. Remember that the revenue guidance has been reduced for FY24, but they're maintaining that they would probably hold on to margins as well as the profit guidance as they had indicated in a quarter before. We'll take a short break, but